Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles VinodSrinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog / newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hey guys, welcome back to Be Rich. Today we're going to be talking about Nvidia. This is a company which we've talked about extensively on the channel, even though I must confess our circle of competence doesn't cover Nvidia or semiconductor chips.
Or AI.
So any criticisms from you guys on anything we cover on this topic is completely valid, and
we welcome it.
Yeah, we welcome it, and we hope some new fresh perspectives can be seen in the comment section below. So that being said, an interesting development has occurred, and I think from a finance perspective, it still holds value to discuss what's going on with Nvidia and where it has gone in the past and where it may go in the future and where it is at currently. So let's look at what's up with Nvidia. So the thing is, Nvidia recently released their quarter revenue growth, and this has been something which has been highly anticipated. Most investors have been looking forward to this in the US. Maybe not so much in India, but I guess even in India, a lot of us have been tracking it. Let me recap something about what Nvidia has meant for the S&P 500 as well as the NASDAQ in the US. So Nvidia has been a huge anchor which has basically powered the S&P 500 and made sure it doesn't sink underwater. And it's been something which has led to monumental gains in the S&P 500. Nvidia's share over the past year has gone up by almost 157% as of the time of recording this video, which is quite a huge rise in a year.
Yeah, Reliance has taken 5 years to do that.
Yeah. So that is more of a standard time frame. Even doubling in 5 years is considered a big feat. That's more than 10% per year. So Nvidia has done it in a matter of a year, which is crazy. So that's something which we should be considering. And the fact is also other companies such as Microsoft and Amazon have also done well over the past year, and Apple as well, riding heavily on the AI boom. And the thing is, the NASDAQ did suffer a lot after interest rates weren't moved in the last meeting of the Federal Reserve. They said that, we're going to stand where we are and we're going to monitor things. And the market took a beating because there have been outsized expectations on revenue which were placed upon these companies, which is why, if you recall in a lot of our previous videos, we said Nvidia, we have no problems with the company's fundamental business model. What we do have a problem is with the valuation and the expectation which the market has and has attached to Nvidia and its compatriots. So that's what I want to be talking about today, because today the market has given us a clear signal as to what its expectations were, what Nvidia had been able to meet, and how far the difference is. Is there a difference between market expectation and what Nvidia has delivered? So, key point here, Nvidia in the last quarter basically year over year doubled their revenue. More than doubled, 122% increase from the previous year in last quarter. Revenue doubled to $30 billion. That's a huge sum of money which we're talking about. And this is a pretty good result which Nvidia has posted. Any investors means this should be a blockbuster return which Nvidia has been able to show within 1 year. Yeah, so this is pretty good return which Nvidia has posted. How has the market reacted to this? Let's take a sneak peek. Well, during trading hours, the market price for Nvidia dipped by 2%, which, okay, that's surprising. Let's see what happened after hours. After hours, interestingly enough, as we're talking about this, the market has tanked Nvidia's stock price in after our trading, and it's gone down by 8%. And that can only tell us that when the market reopens later tonight, we'll end up seeing Nvidia take a nice price hit, though nice is probably conditional on which side of the bet you're on. But what this tells us is that maybe we were right in what we were thinking, or at least right now it looks as if we were right. There are a lot of factors at play, of course. The fact of the matter is, Jerome Powell is, yes, he is dovish now. He's saying that he's going to cut interest rates. but we don't know at what rate he's going to cut it. And some people think it's been a little late. And Nvidia said that the revenue guidance for the next quarter is going to be $32.5 billion, which was a little ahead of the consensus forecast. So they beat revenue expectations by 2%. And we still have the stock price tanking by 8%. I don't know what who's dumping Nvidia and what kind of expectations, sky high expectations they have about it, because we talked about this. We talked about how investors don't seem to have a very realistic perspective on Nvidia, and maybe they're levered to the point where they need those kind of returns to be able to pay off the debt. That could be another part and parcel of this idea. So what do you think about what's happening with Nvidia right now? Because it's very interesting.
Well, what I think is going to be happening is if Fed does cut the interest rate, that means there's no more liquidity in the market, meaning stock prices are going to go up even further. So there are opportunities in the American market, which in the short term can give fabulous returns compared to Nvidia in the short term. So there could be investors who are just moving their money to those options, to exercise those options in the short term because of what the Fed is doing. Because Fed's reaction may change or even come to a stop if the inflation moves around. And with the election cycle coming ahead, there's a lot of volatility and uncertainty in the American market. So there are lots of pockets of opportunity. So if you are an investor and Nvidia is overpriced as it is, so to see in the short term, is there going to be breathing room? Are we going to see another year, bumper a year from here for another 12 months? Are we going to see another 150% rise in stock price? I doubt it. Yeah. So looking that all into consideration, people are taking a gamble, taking a wager, saying that, okay, I can come back to Nvidia in about the same price, maybe around 10-15% this way or that way, and take my money out of that and play with it somewhere else and come back.
Yeah. Another interesting factoid for those of you at home. The company has authorized an additional $50 billion in share buybacks. They think best allocation for their company's free cash flow is buying up shares of their own shares, which is interesting to me. So that tells me that either Nvidia is trying to push their stock price up, which it may well be doing so, or their capital allocators think that there's not much money to be made in just expanding their business, so they're taking their money and buying stock buybacks to reward their investors for taking a bet on Nvidia. But be that as it may, if Nvidia has very good gross margins, and it has a gross margin of 75%. With a gross margin of 75%, I don't know which person wouldn't take that money and invest it back into the business. Why would you do a stock buyback? Either you think that the market is severely undervaluing your stock, or this is just a way to push up the market price and reward your investors. I don't see why, if I personally was at the helm of a company with a gross profit margin of 75%,
I wouldn't know why they're doing a share buyback.
Yeah, I would be investing.
Unless the owner of the company wants to reward himself.
Yeah, unless the owner of the company wants to reward himself. I would much rather be...
Because the buyback might have a clause built in where it's so favorable for the owner.
Yeah, must be.
Like course. Bajaj did that recently.
Yeah.
Where, every 1,000 shares, you get one share, they buy back or some crap like that. Yeah. So I don't know who... Very few people will be in the spectrum of enjoying that buyback.
Yeah. So if I was at the helm of Nvidia right now, given that they're also facing supply chain issues, like they're facing troubles with pushing out their new Blackwell chip. So, and those of you at home who are techies can tell us more about the Blackwell chip in the comments below. But I'm not really focusing on the nitty-gritty of the chip. My point here is operational. If they are, facing supply chain issues, why aren't they taking the $50 billion? $50 billion is a huge amount of money. Let's not
forget. A lot of change. A lot of table change, man.
Yeah, it's a lot of change. So that's enough money to probably set up multiple foundries if they need to. So I don't understand why they're not channeling it back into their business. So
they definitely know something we don't.
Yeah, that's probably what I think as well. So there's something going on behind the scenes.
Maybe this is why the stock price is also taking a beating.
Yeah, possibly.
Yeah.
And interestingly enough, there's another idea that given that the labor data is, not so hot in the sense that the labor market is cooling down. Given that the labor market is cooling down, which is an indication for whether the economy is cooling down, maybe there's a flight away from risk. So people are cashing in their profits on Nvidia and they're saying, okay, I've made what money has to be made. I'm going to move to treasuries because interest rates are going to go down. I'm going to make a lot of money when interest rates come down. That could be happening. There are many possible explanations. And the thing with the market is all of these explanations could be wrong. It could simply be market movement.
Yes, could be.
So that being said, those of you who are at home, We hope you're continuing to track this. And there's a nice case study on seeing how bubbles form and how bubbles may pop. This isn't to say that Nvidia is a poor company, of course not. But this video is more of a case study on how price movements occur in the market and how you can get caught on the wrong end of things. And within one day lose 8%, especially if you're on a leverage bet. And this is.
So you don't take those bets.
Yeah, you don't take those bets.
The point is that this video is precisely that what you just said. These highlights why you cannot take these kind of bets. It's literally like looking at the weather and seeing it's raining and then figure out why is it raining. What happened in the other side of the world to create the clouds here and such density to create the rain? Why did the air pressure change so rapidly to create rain? I mean, if you can believe that nonsense, then you can definitely take these kind of bets.
And I was approached today and asked whether they can buy chip companies in India. And first of all, I didn't even know we had chip manufacturers in India.
We're just setting it up. Tatas.
So I'd say please beware. You can't emulate that strategy here, and that strategy is done in the US at least. Unless we see a revival in the bubble and revival in the AI boom, I doubt there's much more upside to that. And even if there is upside,
I feel the AI boom revival will only happen when we sort our energy problem. Coming to it.
So it feels quite risky at this point. And you know that we at this channel prefer to follow the rules of Warren Buffett, which says that first rule of investing, not to lose money. Second rule, don't forget rule number 1. So please guys, don't forget these 2 rules. There's plenty of time to make money. You don't have to rush into it. You're not losing out on any opportunities. So that being said, we hope those of you at home will hire a proper SEBI registered advisor and consult with them. We are not SEBI registered advisors. This is purely educational. So that being said, thank you very much for joining us on Be Rich today. If you liked the video, please hit the like button. Please subscribe if you haven't already. Hit the bell icon to get notified of when we upload our latest video. And finally, if you have any opinions, comments you'd like to express, in case any techies out there want to tell us more about the Blackwell chip or anything related to Nvidia, please do leave it in the comment section below. It's always a delight to read your comments. Thank you again for watching Be Rich.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.